Guys, good morning. June 10th, 2019, Monday. Let's go. New week full of new opportunities. Man, what a tough deal. Did you guys see this morning? CRM down like $9. So, again, use this strategy, especially in this market, right? Split your positions. You don't have to buy all weekly options. So, you can buy some that expired this week. You can buy some that expired the following week. So, sometimes when you're calculating these moves in these stocks, unfortunately, they don't want to do it on our time. And what I mean by that is sometimes we calculate a certain move on a Friday. It doesn't take place until Monday. Situations like that are going to come up. And one of the ways to protect yourself, if, let's say, you're buying $1,000 worth of contracts, well, buy $500 for this week, buy $500 for the following week. Well, next week is going to be, of course, more expensive, so you're not going to be able to buy as many, but it still gives you a good bit of protection. And so today, nice day for those of you that use that strategy. Now, I've talked about it in some videos. I guess I should just keep mentioning it every video because we have new subscribers that are coming in, and that would have probably been helpful to some of you guys. So just keep that in mind as you're trading this week as well. So here's some things, some main observations. We still think that summer tech crash is going to take place. However, it is still on pause as we're building out the shoulder. We could be building out the shoulder for a number more days, maybe another 7 to 14 days. But here's the analogy and why the market is actually moving higher. It seems like the bad news is the good news again. But the question, is it really this time? Because I think the whole miscalculation that the Trump administration is making, or Trump himself, is the fact that, yes, he's getting the Federal Reserve now with his poor job number to actually most likely lower the interest rates. Well, we're lowering the interest rates will cause the dollar to tank. We're actually going to see the dollar to start coming down. That's short-term effect of lower interest rate. Well, typically when lower dollar will cause the market to move higher. Short-term effect again. Longer-term effect, we're heading to a crash of like 1987 type crash. I will post a lengthy video on that here in the next week or two with multiple reasons why. But one of the reasons is as dollar continues to drop, that will actually create pretty sizable inflation here in the United States because he keeps raising the tariffs. Well, the tariffs, they basically tax every consumer here in the United States. So the prices are going to go higher. And when the prices are going to go higher while the dollar is dropping, that's really going to hurt the American consumer, which is maxed out already to begin with. And what we don't know is the definite part that nobody is able to calculate right now. Is the Federal Reserve going to lower the rates by a quarter point, by half a point, by 3/4 of a point? How soon? This month, next month, September? There's a lot of expectations in the market, in other words, for a lot of good things. Lower rates, stimulus, but we don't know the magnitude and the size of those things, and everybody's clearly hoping a lot of these trade deals. So the question is, what if the market is using this as a sign that we're going back to this bad news is good news, and they're buying the market right now? What if they were to rethink that? Maybe if the interest rate's only going to be reduced by a quarter point, it'll literally have no impact on businesses. It'll literally have no impact. So if the magnitude of the rate cut is not what the market is expecting, if I'm not the only one believing that a quarter point in interest rates is going to do absolutely nothing, then the market is going to drop quite a bit. We're calculating the drop between now and August, and we're going to keep monitoring the market conditions for the purpose of today. However, guys, what we are observing is some pretty hardcore divergences that have been developing in the price of gold and VIX for the last couple of days, and that is something that we should not be ignoring. For that reason, we are calculating around 10:15. There is a probability of a move 2, and there is a probability of a sell-off between 2 and 4 p.m. in a move 6-like behavior. So keep in mind, in most instances, and Tesla is probably a good example, anytime Tesla creates the hype about new announcement, new kind of product that they're launching, typically the stock runs into this positive event announcement type. Same thing with Apple, same thing with a lot of things, same thing with a lot of market expectations that are running high. But what happens once the event actually does take place? Well, if you study the history of Tesla, 99.9% the shares drop like a rock. So what I am noticing is the expectations are running high. There's a lot of things that are being said about possible stimulus. A lot of things are said about lowering rates, but nobody's really talking about the magnitude of the size of these things. And the most crucial thing, the elephant in the room, is the fact that, well, hold on. American businesses are maxed out. American consumer is maxed out. Okay, even if the rates go to zero, would that really stimulate the economy at this point? So I think once everybody realizes that this time around stimulus may not be as effective, we're going to get a severe correction in the market. But until then, let's just focus on trading the market today. We're going to take it step at a time. So let's talk about the things that could be helpful to trading today. So again, a possible reversal around 10:15 and a possible reversal around 2-4 p.m. today. BYD shares pre-market are up again. We've had a couple of bad entries on Friday on this thing, and the last entry was good. That literally took in the last 5 minutes. I got some puts, guys. 145s, the stock dropped when it was actually at 148, so I bought them cheap, and the stock dropped like $11 within 3 minutes. So that was a nice trade, 300%er. But some of the other ones is just the market would just not give up regardless of these divergences between the VIX that we've talked about. The market just did not want to give in. Today, BYD strongly reminds us, again, the behavior in TLRY shares, not a year ago, but maybe, 9 months ago. And so it is very likely that BYD shares could hit a level 160, 170, 180 at some point today or tomorrow. So with that said, buying calls in the money is what we're looking to do today on BYD. However, we do observe that the volume on which the stock is actually trying to go higher today is significantly lower than the volume in BYD shares pre-market for the last couple of days. So by no means should you jump in with a huge position, but buying some calls because this short squeeze could continue today and tomorrow. Buying some calls, just a few, just in case a crazy move like TLRY 9 months ago will materialize, where TLRY slightly reached the level of 299 just in the same day when it opened up in the 140s. Just in case we get a crazy move like that, even with a few contracts, guys, you can make a killing on a huge move like that. So with that said, we're going to be very much observing BYD for an opportunity to reverse that position. We're actually going to try to stage a round trip trade now. So we're going to start with buying calls, and we're going to sell them once we notice that the stock is running out of steam. Now, that may happen at some point today, and we can get a huge reversal to the downside. We may see BYD shares. Basically, what we're looking at is a moment in time where it just looks to you, if you're steering at the share trading prices on your computer, it just looks like BYD, oh my God, it just keeps going to the moon. And you have these huge moves throughout the day. And when you finally see this behavior, this tells you that these large moves are about to stop. And if we catch that, I'm certainly going to try to time that. We're going to reverse the trade into puts, and then we can expect some serious drops literally within minutes. So all eyes on BYD. With insanity comes opportunity, guys. So very exciting stuff. Speaking of which, TLRY shares started acting nicely on Friday. I guess in solidarity with BYD, all the speculative stocks, I guess they flock together on days like this. And today, pre-market TLRY shares are like at $45 last time I checked. So maybe TLRY shares are being awakened by this crazy activity in BYD. There's certainly a correlation there that we're observing, a positive one. And not to say we're going to jump in and TLRY, and you know, but we could consider putting some kind of trade on that at some point intraday. The behavior of TLRY has been such that every time it pops, it drops. So that would be kind of an interesting trade if caught at the right moment. So with that said, let's review the divergence that we're seeing clearly second day in a row. The VIX is supposed to be dropping because the market has been so strong and just keeps moving higher and higher. But second day of divergence in the VIX is something to pay attention to. As positive as the market has been, VIX maintained a level above 16 on Friday, and so far pre-market, the market is moving higher again, and guess where the VIX is? It's actually slightly went higher to 1644, and last time at the moment I took this shot, it was still above 16. Now it could be dropping slightly below 16 at some point, who knows? But every time it gets there, it's very reluctant to fall further. So that tells us, look, as positive and as green as things look overall for the markets, something is just not right here. The VIX should not be at 16. Market is about to retest the 2900 level here. Something is wrong. This is an indication that even though maybe they're buying the markets on lower volume, maybe more people are getting prepared for something that's going to come next. And what's coming next is once we build out the short, there's going to be a huge drop in the market. So gold is another interesting observation, right? Why would they be buying gold? And it's interesting that market has been up for the last 5 days in a row. We get nothing but these bullish continuation type moves in our 13 market moves formula, one after another. And so surprising that gold does exactly the same thing. Actually, gold has been moving up 6 days in a row. Now, what's interesting is this 1350 level in gold has been a critical level for a number of years now. So we are actually looking to buy gold once it breaks above that key level. So maybe if gold trades next week or at some point this week at 1360, 1370, our target price on gold would be $1,480 by the end of July or early August. So we're expecting a huge move in gold if it breaks this level of 1350. Now, until it breaks that level of 1350, it probably does not make sense because it could go in sideways. It could go maybe between 1310 and 1350 for a number of days before it ultimately breaks. Now, when it does break and clear that level, that's the time to jump in. And you can buy gold futures, guys. You can buy options on gold futures. You can just buy some options on some stocks. Unfortunately, there's not a ton of gold stocks that are, trading at a higher range, like $200-300. The highest one would be the gold ETF, GLD. Currently trades around $125. So buying some of that on the call side would be important and meaningful and could produce great results if gold does clear this level of 1350. Another stock is among gold stocks is RGLD, and that one trades about $70-80. So those would be the two top prospects if you're trying to buy options on gold-related stocks. Now, combining these divergences, right? Gold is not supposed to be moving higher when everything is positive in the market. So a lot of people are trying to put their money in gold. It's a defensive play. You don't see typically this kind of action in gold when, market participants are expecting the market to continuously move higher. As a matter of the fact it's the contrary, right? So divergence on the VIX, divergence on the gold. So far this morning, yeah, everything is green and positive, but the volume is light. We've talked about that, yes, BYD craziness continues, but it's continuing on lower volume pre-market. Also, Amazon, yeah, it's up $17, but on volume of only 33,000 shares. That is not meaningful. That is more of a bearish move to me rather than bullish move, despite the fact that the price is actually higher. So initial reaction, we've talked about Friday, is not the true reaction. There's two ways to look at it, and from the psychological standpoint, the time frame on which this theory could be applied, and it does work really well, has worked well for me over the years, is there's two time frames to look at these key announcements. Sometimes it could be a Federal Reserve announcement, sometimes it could be a job report. And so what we've discussed is the initial reaction on Friday to the poor job report number was not going to be the true reaction to that report. So initially what happened when the poor numbers were announced is you saw how quickly S&P futures were moving lower. But as soon as the market opened, they gained some posture and pretty much moved higher through the rest of the day. What you will notice in certain instances is that is the reaction that took place Friday. So initial drop followed by the rise. Now that we're in Monday trading session, what we're actually looking at is overall case scenario, so overall, the initial reaction on Friday was now a positive reaction if we were to extend the time frame between Friday and Monday and going into this week's trade-in. So could the initial positive reaction on Friday be changed today in the market? Could the market participants actually rethink their reaction? And in many instances, I would say in 70% plus instances, the market will change its initial reaction to a meaningful event like this. Therefore, we're pricing a reversal from the positive side to the negative side. We're not saying the market will go into the negative territory at some point today, although we're not discounting that probability. However, we're not going to close at the highest levels of the day going into 4 p.m. And using this trajectory, basically we're looking to short the market once it tries to clear certain levels. The market's been up now for 5 days in a row. Typically, anything that is too good to be true, which a 5-day move after what we've experienced in May, 5-day move higher is something reasonable because the market has been dropping on consistent basis. It had a lot of bearish moves. But if the market indeed going to rethink its reaction on Friday, today could be the pivotal reversal from which we could see actually a few days lower. So if we catch the top, those are going to be some really profitable trades. At the same time, if we take a closer look at the S&P 500, I wanted to bring your attention, guys, right here to what was actually taking place in May, around May 14th, 15th. I like to analyze these things from the standpoint of how the market could repeat something that has done recently. We look at these days in May, we actually see the market got above the blue line and stayed above the blue line. Basically, it always shoot the blue line for a couple of days. So we got the first one of those days on Friday where the market actually briefly traded above the blue line, but then you see a slight reversal, slight sell-off going into the very, very last few minutes of the session, right? We actually created this candle which resembles a bearish reversal candle, which is very much identical to this white candle right here. So in other words, today could be the candle that's going to look just like this red candle. In other words, initially we're going to move higher, but we are going to close at the lowest parts of the day. So that is basically what we're looking to trade. Our trading strategy is going to be based just on this today. Now that excludes the speculative stocks like TLRY and BYD clearly. Okay, so the basics you guys know. We want to short at the higher trading range of the trading tunnel. We want to collect the gains at the lower trading range of the tunnel. This was a trading range of the tunnel going back to these dates that we have discussed just now on the chart of S&P. And the level at the time was 28.93. That was the higher trading range going back into the middle of May 2019. And the lower trading range was identified as 28.26. So I think we're back in this environment where we're not going to clear the level of 2,900, but we are going to be trading in this trading tunnel range. So it's reasonable to expect that if we don't clear this level today, and we are going to get that red tiny reversal candle, that first target moving backwards towards the lower trading range of the tunnel would be about 28.52. Now clearly 28.70 is kind of a level, but basically if we look over the next 48 hours, wouldn't be surprising if the market did pull back here, 28.52. So that's going to be our target. As far as the entry, pre-market, things look pretty bullish when things open up. Actually last night, and we did hit a level of 28.98. So we're looking for a level of 28.98 to come in and start buying puts on S&P, buying puts on your pretty much any tech stock that we've been betting in the last month against. So any FANG stock, anything of that nature, when S&P hits 28.98, we're coming in and we're buying puts on these names. Clearly the action in CRM today, moving lower. It's a rather large move for CRM, $9. I mean, it could be a negative to a lot of other cloud stocks. So with that said, guys, last time the market trading at 28.89. We could clearly move slightly higher to this level of 29.98. That's going to be our entry. If we're moving above 29.05, that would be the time to cut the losses. The market move sequence looks quite interesting, guys. On June 7th, we had an oddball one. And the reason I say an oddball, because if you study the history over the last 60 days of all the moves that we have had on Fridays, specifically just analyzing the market moves for Friday, what you would have discovered is the predominant move for Friday has been a move 11. And that's why I was so confident that at one point in the day we were going to get that move 11, because the probability was just much greater of a move 11 rather than a move 1, historically speaking, over the last 60 days. And combining that with the observation I made going into the Thursday night close, we actually had a clear move 11, a pyramid at the very end of the day. Sometimes these patterns will be highly predictive of what could actually be taken the next day. Now, it didn't take place. So could we just maybe miscalculate this by a day or two? So we could be looking for a variation of a move 11, which would be like a move 2 today. We'll talk briefly about that in just a second. But overall, recorded Friday move is a move 1. A lot of these move 1s that happen after the job report number, if you look at the last 3 or 4 of them, especially when the markets moved substantially higher, meaning 200-300 points on the Dow higher, that move has been reversed 100% of the time on a Monday. So when we combine the divergences on the VIX, the divergences on the gold versus the market, we combine the light volume, when we combine the move 11 behavior we've observed on the Thursday night, when we've combined the statistics of the job report announcements after Friday move 200-300 points higher on the Dow, knowing that there's 100% of them reversing in the last few cases, that gives us a pretty good probability of the market reversing. Even though we did record this as a move 1, clearly at the very end of the day, and the move and the magnitude of this move behavior was not significant. But look, when we had this sell-off, all of a sudden, we lost like 10 points real fast on Friday. Look what happened to the volume. So the magnitude of the sell-off was not big, but the volume was really strong at the moment when that sell-off was taking place. So a lot of times, this would be indicative of what could be happening the next day. So we're combining all this. We got about 5-6 various things that point to a potential reversal today, despite of the market looking so green. The 2-day sequence is 5-1. This is how it looks on the chart, guys. And the 5-day sequence, whew, look at this. 12, 1, 7, 5, 1, all green. Looks like the bulls are in full control. However, from the experience of recording this market moves, guys, things like that, they don't last forever, okay? In other words, when you have 5 bullish moves in a row, could we get another bullish move? Yes. Could we get another 2 bullish moves? Yes. When a market moves 5, 6, 7 days higher, each day we're moving higher one more time, decreases the probability of another move higher the next day. In other words, 2 consecutive moves, bullish moves, have a greater probability than 3 consecutive bullish moves, and so on. So basically, we're getting here to a point where it really doesn't pay to be a bull. If we're talking about just trading directional options, for example, on SPY or the Qs, we're getting to a point to where we can't say with 100% certain that the market will drop and it will be negative today. However, that probability is increasing in relation to the probability of the market consistently moving higher and higher from here, especially when we're getting to a level of 2,900. So with that, keep in mind that overall, the uptrend has been rather strong and bullish, and we've had, as pointed out in the last video, a series of these head and shoulder reverse head and shoulder formations, with the exception of the one on Thursday. So I'm still trying to figure out if this was meaningful or this was just an oddball move in the day. Maybe some people are just getting scared of the job report number. But we'll find out today. So today is going to be a very interesting day, possibly presenting some awesome opportunities, guys. So with that in mind, we are considering, as pointed out earlier, a move 2 between the hours of 10 and 10:30 in the morning. Move 6, where we see a sell-off, kind of like what we've seen on Friday in just a few minutes, where the indexes lost like 10 points on the S&P futures. But this could be a much rather magnitude of a move today. And clearly, so far pre-market, we're observing these move 7, where last night futures opened up pretty high, and then they dipped this morning, and now they're moving them back higher. So that's a move 7 type behavior, and it does have a probability today. However, we think the reversal has a higher probability by the end of the day rather than a bullish move. So with that, VIX, again, we've talked a lot about the VIX. Could it retest 19 by this evening? Hey, it's been holding up really well above 16 levels, so with all the positivity in the markets overall. So I think we still have a probability of it hitting 19 by the end of the day. Now, buying puts at 28.98 would be a great entry level, basically betting against the breakout above 29.02. If the break above 29.02 happens, then we're cutting losses around 29.05. So we'll be tolerant slightly if it gets to 29.03, 04. But if we're above 29.05, just cut the losses and we'll move on and reevaluate the strategy. So again, watching for move 2 or 6. And we're definitely increasing the put position size. If we do get that reversal as in move 2 or 6, we are increasing the put position size, especially if VIX and gold maintain divergences with S&P futures throughout the day. Guys, make it an awesome trading day. I'll catch you on the next trade tomorrow.